Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, the unemployment data is not what it seems to be. In fact, it's far, far, far away from reality. We're going to talk about what you should expect with unemployment and what that really means for our economy. You're not going to want to miss this. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob. So interesting statistic. I actually wasn't aware of this, although in the back of my head, I kind of realized that, unemployment, the numbers that we see from the government and what the big institutions trade off of really doesn't reflect what's going on at the ground level. So I was wondering if maybe you could kind of take us through what this is, what this means in reality.
Yeah, what's called the blinding flash of the obvious. The unemployment information is totally misleading. And I'm going to give you an example of what you would look at as what truly would be employment in this country. And here, this is the government's, I'll just read it. But using the data compiled by the Federal Government Bureau of Labor Statistics, the true rate of unemployment tracks the percentage of the labor force that does not have a full-time job, meaning 35 plus hours a week, but they want one, they have no job at all, or does not earn a living wage, conservatively pegged at $25,000 annually before taxes. So what do you guess that number is? Because the government tells you unemployment rate is at 3.8% and we are humming along, but the data tells a far different story. How about being off by a factor of 8, Phil? And we have 24.2% of the population is basically unemployed or underemployed or underpaid. And to me, that is absolutely scary. And you can see it, you can feel it. I think that's the vibe you're getting now when you listen to people and you look at social media and people are just like, man, I can't make it. Now, there's probably more people working 35 plus hours a week, but they're doing it in 2 or 3 or 4 jobs, which in and of itself is a different problem. And you can blame the insurance rates, the insurance laws for health care, all this crazy stuff that people have to do. And companies, look, they just don't want to hire. And the people that, don't have the skills to be able to move, because there's a lot of jobs that are open too, but we don't have the skills to match. And Phil, you have a chart here that the reason why we're bringing this up is that we always say that this market's going to roll over when the employment rate gets higher. They're trying to press this narrative down because once people start seeing this next chart, this is the jobless chart. And Phil, I'll let you explain this chart here. This is the one, when you see this thing curve up, this is no bueno for the economy, and the stock market usually gets obliterated with this move too.
Right. So I think with jobs data, you have to kind of look beyond what the government data comes out with every week with unemployment, non-farmers payroll numbers and things of that nature. So this is average weeks unemployed, which doesn't get much fanfare, and for good reason, because if you look at the way this thing goes, typically when you start seeing a rounded bottom on this and it starts to turn up, you invariably get a recession. And, that's where we're at now. So this basically is telling us that we're on the cusp of a recession. And what's interesting about this is that even if you look at the levels prior at the great financial crisis, which was our last kind of big recession there, you'll notice the average weeks unemployed is much higher. So, where's the strength in the economy? If the economy is really humming along, right, then everybody should be fully employed. And I mean, you really should have this number should be going down, not up. If you look at every recession, it seems like we're going higher and higher and higher on average weeks unemployed. So I just think it's a continuing deterioration in the core of our economy. We're not producing as much anymore and probably need to get back to that to fix this. Otherwise, we're just papering over the problem. And ultimately, we're creating a financial house of cards cards with all of this financial engineering that's going on in the system, which ultimately at the end of the day just turns into leverage. And so I think you just have a series of these house of card implosions like we had at the dot-com bubble, the great financial crisis, and now we're in a combination of a big blow off in like a big cycle blow off with AI narratives kind of being like a tech 2.0 type bubble, among other things. And then just you have that high concentration in those tech names. So, it just, again, pointing to like the catalyst, I think is just going to be an implosion of, I think ultimately earnings, Bob, are going to come in. They're going to start missing, because that's what seems like earnings kind of catapult us, right? Every quarter now we get earnings beat, and they always beat, right? But I think one of these quarters they're not going to beat, and it's going to be ugly. And I think what will happen, what we'll see is that actually the top in the market will already be in, because Wall Street will be front running. They always know. And this is just giving you kind of a preliminary read on that. So again, it's about timing. This market can go higher, even though all the warning signals are starting to pop up here, but it takes time for these things to top out. So I think this is actually just a good reflection of what's going on here. I think if you look at the other data, other than what they try to promote, then yeah, 24.2% should not be a surprise, although that does seem shocking to hear.
Yeah, and I think Janet Yellen's going to tell us tomorrow how much additional leverage she's going to try to pump in. The estimate is going to be $1 trillion of additional liquidity is being pumped in. The interesting thing about it is where it's going to go. That's the thing I'm watching. Is they're going to go all right back to Janet Yellen because they're going to be buying bonds, or they're going to speculate in the stock market. So keep an eye on TLT, keep an eye on the Treasury yields 90-day, and keep an eye on, basically the general index. You can use SPY or SPX to give you a sneak peek. Also, the Fed I think their meetings Wednesday for interest rates. And see, this is the problem we have here. I mean, this is the worst possible world. We talked about this last week. We have slowing growth, we have underemployment, and yet we have inflation that's too high and keeps the Fed from being able to react. And so it's going to be really interesting to see. And basically, the money that's being spent is being spent in very, very, very specific sectors of the market. The amount of money they're spending on the wars is going to be national defense, and basically, there's not too much room left elsewhere. The FANGs are starting to struggle now too. So it's going to be really interesting to see. We still think there's going to be some sort of crack up boom, and definitely into commodities, but August 15th still my date, 22nd, whenever the Jackson Hole meeting is. And I think Phil's not too far behind me. He probably thinks maybe we could sneak into September, but that's probably when you want to be exiting stage left if you haven't already bailed out.
Totally agree. Let us know what you guys think on this down below in the comments. Otherwise, guys, check out our stuff over at tradegenius.co, helping navigate these markets as we get into more and more volatility as this thing tops out into the rest of the year. Thanks, Bob. We'll catch you guys on the next video. Bye.
See you later.
Trade Genius.